Welcome to the Daily Business and Finance Show. Amazon faces landmark antitrust case as FTC and 17 states file lawsuit. JP Morgan's Jamie Dimon warns against Fed rate rising to 7%, target to close 9 underperforming stores amid surging theft. Retail theft spikes nearly 20% in 2022. S&P Dow slumped to lowest close since June on rate concerns. Nasdaq set for May end. Burger King faces social media backlash. What should QSR investors do? Intel German plant struggles with hiring. Consumer confidence plummets, leading retail stocks down 20%. Stay tuned after the short ad break to delve deeper into these headlines. Amazon is currently facing a lawsuit filed by the Federal Trade Commission and 17 state attorneys general. The lawsuit accuses Amazon, the e-commerce giant, of engaging in monopolistic practices. According to the complaint, Amazon allegedly employs unfair strategies to maintain its monopoly power. These strategies include preventing competitors from lowering prices, compromising quality for shoppers, overcharging sellers, stifling innovation, and impeding fair competition. The Federal Trade Commission claims that Amazon's conduct has a significant impact on retail sales amounting to billions of dollars and affects millions of shoppers. In response to these allegations, Amazon argues that the lawsuit is incorrect both in terms of facts and law. As a result of this news, Amazon's shares experienced a decline of 3.1% on Tuesday.
JP Morgan Chase CEO Jamie Dimon has issued a warning, expressing concerns about the potential consequences of the Federal Reserve's benchmark interest rate reaching 7%. According to Dimon, such an increase could result in stress within the system and potentially lead to a difficult economic situation for the United States. He points out various risks, including the ongoing Ukraine war and fluctuating oil prices. These remarks contradict the prevailing belief that the Fed is approaching the end of its tightening cycle.
Target Corporation has announced plans to close 9 stores in major cities across the United States. These closures are scheduled for October 21st and are a result of underperformance. Various factors, including violence, theft, and organized retail crime, have contributed to this decision. It is worth noting that these store closures represent less than 1% of Target's overall store base. However, they could have a positive impact on the company's margins. Target has been actively addressing the issue of rising shrinkage and has shown support for the Combating Organized Retail Crime Act bill. As a consequence of this news, Target's shares experienced a decline of 1.75% on Thursday. This drop occurred during a generally challenging day for the retail sector as a whole.
Retail theft saw a significant increase of nearly 20% in 2022, resulting in losses amounting to $112.1 billion. This marked a rise from the previous year's figure of $93.9 billion, as reported by the National Retail Security Survey. In response to heightened violence and organized retail crime, Target made the decision to close 9 of its stores. Other retailers such as Dick's Sporting Goods, Lowe's, and Macy's have also experienced reduced earnings due to the escalating crime rates. Recognizing the need for action against organized crime, the National Retail Federation has called for policy reform. However, they caution against potential unintended consequences that may arise from measures such as increasing felony theft thresholds or eliminating cash bail.
U.S. stocks experienced a decline on Tuesday, driven by economic data indicating a decrease in confidence and the Federal Reserve's indication of prolonged higher rates. The Nasdaq Composite, which is heavily focused on technology stocks, dropped by 1.57%, while Amazon saw a decline of over 4% due to a lawsuit from the FTC and U.S. states. The S&P 500 also declined by 1.47%, and the Dow slid by 1.14%. Across all sectors, there was a widespread downturn, with utilities falling over 3% and consumer discretionary dropping over 2%. Treasury yields remained relatively stable. However, concerns about interest rates were heightened due to consumer confidence and new home sales data. Additionally, Wall Street is closely monitoring negotiations in Congress regarding the stopgap spending bill, as there is potential for a government shutdown on October 1st.
Shares of Restaurant Brands International declined by 1.35% on Tuesday, alongside other restaurant stocks that also faced negative territory. Burger King, a subsidiary of Restaurant Brands, has been receiving backlash on social media for withdrawing its advertisements from Rumble following sexual assault allegations against content provider Russell Brand. It is worth noting that previous social media boycotts have had varying effects on brands, with some like Coca-Cola and Dick's Sporting Goods experiencing decreased sales while Target witnessed a decline overall. However, astute traders have historically benefited from such overreactions. Anheuser-Busch InBev's Bud Light brand serves as an example of the impact a social media boycott can have, as it experienced a significant decrease in market share. Nonetheless, Restaurant Brands operates multiple brands including Tim Hortons and Popeyes, which may help mitigate any potential sales decline resulting from the boycott. The true extent of the earnings impact remains uncertain and will be disclosed in forthcoming reports regarding restaurant traffic.
Intel's €30 billion investment in Germany to construct semiconductor facilities is encountering staffing challenges. The company is in need of 3,000 employees for its Magdeburg plant by the end of the decade, but this year's apprentice program only has 2 participants. Intel intends to commence training a class of 20 individuals next August, while nearby universities are also implementing degree programs focused on advanced semiconductors. To support the project, the German government is providing €10 billion in subsidies. Over the next decade, Intel aims to invest $88 billion in Europe specifically for manufacturing purposes.
Investors should prepare for a challenging holiday season and early 2024 as concerns about the U.S. economy continue to grow. Consumer confidence has declined for 2 consecutive months due to factors such as increasing prices, political uncertainty, and higher interest rates, which have negatively impacted sentiment. This decline in confidence is observed across all age groups and income levels. While consumer assessments of the current situation remain unchanged, expectations for the next 6 months have dropped below recession levels. As a result, several consumer discretionary stocks have recently experienced significant declines. It remains uncertain whether this downside has already been factored into market prices. Defensive positioning has proven beneficial for retailers like Target, Walmart, and Costco compared to others in the sector. These companies have demonstrated better performance due to their ability to adapt and respond effectively amidst challenging economic conditions. Overall, it is crucial for investors to be aware of these trends and adjust their strategies accordingly during this period of economic uncertainty.
Thanks for tuning in to the Daily Business and Finance Show. Stay informed, stay inspired, and keep reaching for your goals. Until next time, I'm Montgomery Jones.
And I'm Amalia Dupre. It's been a pleasure, until we meet again tomorrow.
This content is sourced from the Seeking Alpha website, so support our podcast by becoming a Seeking Alpha Premium subscriber. See the show notes page for links to sign up. This episode is produced by Classic Studios. Check out our other podcasts in our network at classicstudios.com.